Obviously, when you have such a fast rise in interest rate in such a short time, such a compressed time frame, very few businesses are built for this. But at the same time, because of this, opportunities and cracks do come. Right? So you basically have to look at things in three ways. You have to invest in sectors where your cost of funds may be going, but the returns you're getting is rising with the cost of funds, whether it rises or start to moderate, and that's actually in private credit, right? That's actually getting to be a very good sector. Even in Asia, we have had quite a bit of success in Hong Kong and Australia and a few markets here in between those two. Obviously, there's private credit, and then you have to find opportunities where are dislocated, right? Opportunities existing, maybe stressed developers from China who actually have assets overseas, who happen to need to find liquidity out of the portfolio to deal with the coming bond maturity and so forth. So you find those opportunities. In some cases, could be distressed opportunities to allow you to get into the equity position. In some cases, could be just short-term bridge loans. And then thirdly, you have to look for opportunities where the rent or the income may actually outrise the rising interest rate, or at least can adjust to the much higher interest rate that we have today. Sectors that have recovered really, really well are luxury residential and also luxury travel, interestingly.
Luxury residential where?
Luxury residential, I would say, in markets where you have high net worth individual migrating to those places, looking for higher quality of life. And that higher quality of life could be freedom to travel, could also be weather related. Right, the world is getting hotter and hotter. Certain weather pattern is making certain cities more and more livable or less and less livable. And if you look at that, for example, I do feel Hong Kong in the near term, maybe this is not a universal view, luxury residential could be pretty resilient just because there's so much capital trapped in China. And many of those capitals are always seeking for, as they make money, they're looking for a better place to live. Hong Kong offers a pretty attractive opportunity. Singapore, where we are, has attracted a lot of capital because it is a money center. It's a private banking hub in Asia and one of the few in the world.